What's going on, guys? In this video, we're going to talk about why scalpers, especially futures traders who are either playing the ES or the NASDAQ, are failing and making things way too complicated, right? You're over analyzing the data. You're over analyzing every single move, every single loss, every single win. You're just over analyzing the data and the information that's in front of you, when realistically what you want to do is make this as simple as possible. And when you really lay it out in hindsight, it's very, very easy, right? It's very, very easy in hindsight. Of course, when you backtest your strategy and you find these potential setups, it looks like, you should have been in a trade all day, or, you should have cut this trade at this particular level. But how come it's so difficult when the markets are live, right? So again, why it's difficult when the markets are live and you're in the action and you're in the trenches is because that's all emotion, right? So over time, with taking more trades and having more experience and building up a little bit of a cushion and doing this over and over and over, it gets easier, right? Like, I wish that I can sit here and tell you guys, like, if you have this exact entry point or this exact edge or this exact strategy, or if you just do this, everything falls into place. But it's not that simple, right? So the only real way that it becomes easier is by taking trades. Let me stop real quick. Guys, if you could do me a quick favor, hit the like button, hit the share button, leave me a comment, let me know that everything is working, you guys can hear me and everything. It really helps out the YouTube algorithm. Also, guys, if you want to get into Evolution Traders, a mentorship and community, that link's down in the description box below. But, just getting back to kind of the case in point, you have to really simplify things. And I know I've made videos on this before talking about, having easy entries, having easy exits. It's really, really going to be beneficial to you as a trader long term, the more simpler you make this whole process, right? So if you're not backtesting your strategy each and every single day when the market's closed or before bed, and on the weekends you're not going through and really backtesting your strategy, all you're realistically doing is setting yourself up for failure. Because the only way that you can get more experience besides actually taking the trades when the market is live is by backtesting your strategy and putting yourself mentally in that particular trade. So if I was in this trade, what would I do? Where would I look to take profits? Do I have a trading plan that is allowing me to take, 5 points off the ES or 10 points off the ES? What am I realistically looking for as far as risk, right? And so when I take a trade, we're looking at the ES chart here. If I take a trade, how much am I expecting to lose on, on average, right? So here's a little bit of something that I like to do on my back testing to kind of mentally put myself into these trades. I start off on the 4-hour chart. Sometimes I'll start off on the daily and I'll kind of mark out some supply and resistance zones. So I'm just going back a couple of days here, going back to Thursday. We got some highs here. We've got some lows here on Thursday and Friday. And then obviously in this overnight session here on Sunday, we put in this, new little low here. So I've got a little bit of a range, right? So this is going to come into play when we are looking to scalp and we're looking to kind of take these plays, because potentially we can take plays that are coming off of one of these zones here and play them into the next zone if you want a bigger price target. And it's going to kind of give you a good little idea of, potentially where you should be taking profits and where you should potentially be, taking stop losses. So if we look at just today's price action, okay, and I kind of want to play something out for you guys. So what I want to play out for you guys here is, if we kind of look at the ES, right, the S&Ps, look at the setup that we have here immediately off the bell. It's a big green engulfing candle here. Now, this trade is an active long setup going all the way back to 610 PST. So all you realistically need to do, okay, regardless if this trade set up right off the bell or it's set up a little bit before the bell, you got to look at a couple of things, right? If I zoom in here, we've got an area of, last week's support down here. We've got another area down here. We're kind of trading in the middle of this range. We got the high side here. We're looking at the 20 SMA. We're also looking at the 200 SMA. If we really make things simple, right, and we just kind of forget about everything that's going on over here, because we don't know what the day's price action was going to tell us. All we know is what's going on right here. The clear and easy thing to do is just to set a stop loss down here, right underneath this candle that closes above the 20 SMA. That price is sitting at 41.61. Now, when the market opens up, your pivot level where you're going to be looking to get into, right, and this is how we mentally replay this, is sitting at 41.67. So we're looking at about a 5.5, 6 point kind of stop loss, right? Now, what we do from there is we kind of just tailor our position sizing, our risk, right? How many contracts we're going to play based on if we do lose the 6 points, how much are we willing to give up, right? And you can kind of do the math on your own. Some people might feel comfortable trading 5 cons. Some people might feel comfortable only trading 1. So everyone's risk tolerance is a little bit differently. So immediately, just looking at these few things, we're over some of these lows from last week. We're over the 20 and the 200 SMA. We get a nice little pop here off the bell. Let's just make this as simple as possible and just get into the trade, right? Now, some of you may be thinking to yourself, well, it's easy to say in hindsight. It's really simple in live markets as well as looking back in hindsight, because although we don't know what's going to happen here, we don't know that this is going to run up, right? We also already do know that if we do lose, we're only going to lose 6 points. So whatever risk we're going to put on the table, we're already prepared to lose that. And that's kind of the psychology that I want to put you guys into, is understand how much you're going to lose prior to getting into the trade and go in with the expectation that your trade's going to lose, okay? 99% of the time when I enter into a trade, I am quick to take profits or break even or cut my losses because I'm already anticipating that I'm going to lose. Now, whether that's the best way to go about it or not, it's kind of what's worked for me over the past 8 years. Because when I already know and understand that, where my potential stop loss is at and what I'm prepared to lose on the trade, I kind of am not stressed at all when I'm actually in the trade. And according to your strategy and your system, you should have some sort of estimate as to how much profits you're actually looking to take based on your particular strategy. So this is why backtesting after the market is closed and on the weekends is really, really good, because you can go through hundreds and hundreds of plays on a month-over-month basis and kind of get a good feel for my particular strategy. Normally, if it works, goes for about 4 to 6 points on the ES. So if I already know that, and I already know how much I'm looking to lose if the trade goes sideways, which is around 6 points on this particular trade, well, then if I can grab 4 to 6 points, it's essentially a 1-to-1 risk to reward ratio. Your strike rate's going to be a lot higher when you shoot for a 1-to-1. You're going to be a lot less stressed because you're either going to be out of the trade for a loss very quickly, or you're going to be taking profits relatively quickly. So if we kind of look at how much this play actually ran off the bell here, the entry price was 41.67. We understand that we're going to lose 6 points. We're going to expect to lose this 6 points. However, if it does go in our favor, we know that me personally, based on this particular strategy on the ES, I'm pretty comfortable in getting 4 to 6 points. And when I do take those profits, I know that I need to kind of wait for the next setup to happen before I can take another trade, versus just trying to re-enter the trade on a new high of day break or a new low of day break, depending on if we're long or short. So if we look at the entry from 41.67, this quickly runs up to 41.73, which is around 5 points. So essentially we could have taken out 5, 6, 7 points within a matter of 5 to 10 minutes. So that trade is done. This is a winning trade. Now, if we look at the next setup, right, and if I kind of remove these lines from this last trade that we're going over here, and we make things really, really simple, well, then when we close below this 20 SMA, we're going to go ahead and put a pivot down here, and we're going to use that 1-bar stop system as our exit. So not knowing what the market's going to do, we're already going to go into this trade expecting to lose, okay, and I'll get the exact numbers in just a second here, but we're going into this trade expecting to lose potentially 9 points on the trade. Now, we would potentially be looking to lose 9 points because that's what our risk is going to be based off this one specific candle. Now, if you get to this setup and you're looking to take entry on it, and maybe you don't want to give up 9 points on this particular trade, then you don't take the trade. If that's a little bit too much risk for you, you don't take the trade. If you have to size down from 5 contracts to 3 or 3 to 1, and you would like to take the trade, just understand you're prepared to lose the 9 points. Now, if we just kind of play this one out based on whether you did want to take the trade or not, this particular trade goes from 41.60 all the way down to a price of 41.51. So it goes up about 8 to 9 points in your favor. You would have made money on this potential trade if you were looking for, based on your strategy and your back testing and your history taking the particular trades, you would have been looking for that 4 to 6 points. Essentially, you would have taken a winner here and taken a winner here for about 10 to 12 points in the green. Now, depending on whether you want to continue to trade or you kind of want to stop on the day is completely up to you. I also kind of tell my traders at Evolution Traders that I tend to stay away from the New York lunch hour or as we get close into it or right coming out of it. So particularly, I'm not really looking to take too many trades between around 8:30 Pacific Standard Time and around 9:30 Pacific Standard Time. I'll look for some more trades after 10 a.m. And if we kind of look to see what setup happens after 10 a.m. was a long setup here that potentially you would have been risking from 41.67 all the way down to 41.63, around 4 points here. That goes up, and I don't even need to count the points, but you can see you would have gotten another 4 to 6 points off that if you're going to take profits at 4 to 6 points. So again, that's 3 potential trades and potentially 12 to 16 points in the profit. So again, why are you failing and why are you not understanding and why are you making things more complicated? Go into the trade expecting to lose, follow your strategy, understand how many points you're willing to give up, and then just go ahead and put yourselves in the trade and understand, due to backtesting, how much potential points you're willing to kind of take off the table on that 1-to-1 or 0.5 to whatever. So again, I hope this video helps you guys. If you guys do want to join Evolution Traders, that link is going to be down in the description box below, and I'll catch you guys all in the next one.